Hey everybody, I hope all is well. This is kind of a new Let's Talk Real Estate, but I'm here with a good friend of mine, and typically this time of year we're talking baseball, but this is much more important than baseball. So this is my good friend Andrew Penney. He is actually with Hancock Mortgage, and he has got a lot of stuff that you guys need to hear and know and wrap your arms around. So Andrew, I'm gonna let you just kind of start going, buddy. And I appreciate you meeting with us this morning and going through all of this, because it's a handful. And like me and the girls and everybody were talking yesterday when we were having our office Zoom, was there's so much changing and so fast, like not 2 days are the same, it seems like, in this business right now.
That's absolutely right, Jimmy, and thanks for having me, man. This is really unprecedented times right now for all of us in the real estate business and everybody everywhere, honestly. Obviously, this virus has thrown quite a monkey wrench, so to say, into everybody's lives right now. In my world, in the mortgage business, we're seeing updates sometimes 2-3 times a day on requirements, credit requirements, debt to income ratio requirements, et cetera. So, a lot of what's happening right now is, really kind of unprecedented in a lot of different ways. So, I think it's really important that we get a lot of this information out to people so they can be well armed, and especially for any of those that are in the market to purchase or sell, here in the next 6 months to a year. It's going to be really important to understand what's happening. I don't know, 3 weeks ago, maybe, Jimmy, maybe 4, I think, lots of lenders could go down to crazy low credit scores, us included. I think 550 was pretty standard for lenders like Hancock Mortgage and others out there like us. And since the start of the quarantine and stay-at-home orders, and the ravaging of this virus into the communities, the mortgage servicers out there started making some changes, and the investors started making some changes on, what types of loan products they would purchase, what types of requirements would be, placed on the guidelines for someone purchasing a home or refinancing for that matter. So it's an ever-changing game at this point. I think last week on Friday, we had been notified that most of our investors had increased their credit score requirements up to 620. And I think...
And buddy, not to cut you off, but we were like financing people like in the 5s, weren't we?
Yeah, for sure. I think probably last year, not a huge portion, but I'm pretty sure I probably did 5 or 6 deals with, people that had credit scores of what would be considered poor, under 600. Those programs are just not there right now. And, part of what, I want to get out to people is kind of explaining why that's happening. And, the unemployment numbers came out this morning. But before I get there, last week, the week before, we had, I think it was 3.3 million unemployment claims.
That's crazy.
In a week. So
crazy.
Yeah, it's really nuts, and it's really sad. This is beyond anybody's control, and you think about that many people losing work over something that they had nothing to do with. If you go in and you miss work, or you get drunk one night and you don't show up, or if you do something yourself that causes you to lose your job, then that happens sometimes. But when it's something that's completely beyond your control and it's impacting this many people, it's kind of scary. And the impact into the economy long term is going to be pretty devastating. So hopefully we can get through this virus and get people back to work quickly.
We need it bad.
Not staying at home, people, please. Unless you absolutely have to go out, don't stay at home. Be smart, So 620 was last Friday, and I think on Tuesday, Jimmy, we got notified that we're moving up to 640, and virtually almost all investors out there are. I do have the ability to still go down to 620, but it's through a brokered channel, and the rates are terrible.
Gotcha.
The cost is also extraordinary.
So they have to weigh those options, and it may be worth it for some people, or it may not, who knows, but who knows where rates are going to be in a year from now. We just don't know.
No, we really don't. And, I'm confident that, a lot of what's going on in the economy is completely driven by this virus, right? Like when we had the massive recession back in the mid 2000s, late 2000s, it was all driven, from defaults on mortgages and foreclosures, right? So
Yeah.
there was way too many people out there getting homes that really had no business buying a home. And when that happened, it was due to foreclosures, and that drove down the prices of homes. And the foreclosures just went through the roof. That's why they created all those refinance programs where it didn't matter what what kind of equity position you held in the house, they still let you refi, even if you're upside down. And that was to try to prevent the flow of foreclosures. We're not for that this time. This is not driven by real estate at all or mortgage at all. And in fact, the real estate market was really booming, before this happened. And you tell me, what was inventory like a few weeks ago?
But it was, we were edging right on like just 3,000. We even dipped below 3,000 homes active on the market, and, at times. And now, well, I know last week we were 3,400, and I think we're getting close to maybe 3,500. So it's slowly climbing. Typically, every morning I get up, I check the hot sheet, and the hot sheet is kind of like activity that's happened within the last 24 hours. And typically, we average about 120 to 135 new listings countywide per day. And I think, most of this week and last week, we're hitting about 90 that's active. But the thing is you're not having all the contingencies and the pending. So the inventory is slowly bumping up, not fast, but just slowly. And I think I might have even told you last night, I went to a listing appointment, a very good listing appointment, that the people were like, hey, should we just wait through all of this? But with the rates bumping up and the inventory bumping up, that they're kind of like, no, we probably better do it now, sooner rather than later. And I said, well, I agree with you, because I'd rather compete against 100 rather than 300, So fully agreed. And we got it, thank God. And
Awesome.
But it's a nice one, and hopefully it does sell quick for these people's sake.
Yeah, and I think, Jimmy, you might see a lot. I think we chatted about this a little bit last night too. Is that as inventory increases, it's going to turn more into a buyer's market.
Correct.
Which at the end of the day, we've been in a seller's market for years.
And Andy, I want to touch. I think. And I do talk to a lot of customers that are like, oh man, the houses that are 200,000, I'll be able to pick up for 60,000. And I don't think those days are coming.
No, I don't think so either. It's now, will we see a slow in appreciation? Possibly. In my opinion, I think appreciation was a little accelerated anyhow.
It went quick.
It was, I remember I closed one last April. FHA purchase, I think it was a 205 was the original purchase price last April. And then we went in to look at a refi for them this past December when rates dropped, and it appraised at 220.
Wow.
So it went up 15 grand in a matter of 8 months.
And that's just crazy, but that's just what the nation's done,
Yeah, it is. And, some of that, I don't think, in my opinion anyways, I don't think it would be a bad thing to slow a little bit of that. Now, we don't want to stop, of course, but we don't want it to accelerate to the point that it was in the mid 2000s to where we're going to create a bubble, because there's just too much value in the real estate market. But I don't think we're going to go there. I don't think we're going to see depreciation either. From everything that I'm reading, this is, hopefully going to be when I say short-lived, it's kind of hard to determine what short-lived means, but it's not something that should last a year. We should be able to get through this virus in the next month or two. We're going to see a pretty big peak over the next couple of weeks in cases and deaths and stuff like that. So people need to hang tight and be vigilant, be smart. But because of all of these things that are happening, investors in my world in the mortgage market are really trying to take a look at risk, so they know with the number of unemployment claims that are hitting already, that's going to, turn into people having trouble paying their bills. Correct. it could end up leading into foreclosures happening. And, and I did a video earlier this week about forbearance. You're hearing a lot of this stuff on the media about people doing forbearances on their mortgages. And that is a possibility for some people, and some people do need that type of help.
And what is that, Andy? Not to cut you off.
A forbearance is, basically when someone's into financial trouble, they call their servicer of their loan and they say, look, I lost my job, can't make ends meet right now. Is there something that we can do to, halt the payments temporarily until we can catch up, kind of thing?
Okay.
So you go through an approval process with the servicer to see if they can approve you for that type of thing. And typically what happens is they will go up to 6 months, 3 to 6 months typically is what they will let you skip. And everybody thinks, oh, wow, I got a free ride here for the next 3 months or 6 months or whatever. But it's not really how it works, because the servicer of that loan doesn't own the note.
Yeah.
The note is owned by the investor, which is Fannie Mae, Freddie Mac, Ginnie Mae, et cetera.
So they got someone they answer to.
They do. So they have to still pay those entities that money every month, even when you're in forbearance. So you have to be approved to be able to get that. But what they also do in a forbearance is they typically will, after that 3-month period, let's say you get approved for a 3-month forbearance. On month 4, you got to pay all 4 payments at once.
Wow. That's hard.
Yeah. So if you're having trouble paying 1 payment now, it's probably going to be very difficult to pay 4 3 months from now.
Sure.
So a lot of times what people do at that point is try to refinance the loan, do a loan modification, which can also be very time consuming and not always, you can't always get approved for them, et cetera. So, what I've been urging people is if you really feel like you need that type of a solution, call your servicer, see what they send you. And if you have questions about it, reach out to a professional that knows how to read this stuff, that understands it and can explain it to you in, regular, layman's terms. Because it's a huge decision to make. It's I've seen on the media that, oh, it's not going to impact your credit. And I'm like, 80% of credit reports out there have something wrong with them. There's some inaccuracy on 80% of credit reports that exist. So if you really trust the credit bureaus and these servicers not to report this stuff,
yeah,
you're playing Russian roulette. It's just really not smart. You should always bank on the fact that more than likely, if you're not making your payment, it's going to impact your credit.
Yeah.
If it doesn't now, it probably will later. So, and, I'm not trying to tell people, hey, don't do this. It's absolutely a terrible idea. It might be a good idea for certain people. They might need to do it, but it's very important to understand what you're agreeing to.
Gotcha.
We also had news yesterday, Jimmy, that, and I'm not going to say the lender's name, but they're a huge player in the mortgage market, a huge loan servicer. They purchase a lot of loans, and they have raised their credit score requirements to 680.
Wow.
So when you think about that, I mean, how many people is that just going to completely push out of the market,
Well, buddy, and not to cut in right there, but for rentals, most rentals and even our agency, we try to at least get a 600 credit score. And sometimes just on rentals, trying to get that is so super tough. That's why before we're like, dude, if you can get a 600, we could get you to buy a house. So now, you were saying 640, now 680.
Yeah. And, since they're such a big player in the industry, in my opinion, we're going to start to see some trickle down effects of that decision on the rest of the market.
Sure.
Because a lot of people sell to this particular entity, so if they can't sell loans to them unless the score's there, they're going to require their scores to go up to that level so they can sell the loan. So we're probably going to start seeing some trickle down effects of that here in the coming weeks. Because of this, and I'm so happy that I'm working with Hancock Mortgage right now, man, because we're kind of built for this thing.
They're good company.
I work virtually pretty much all the time. I do have an office and I do go in there, but it's, usually I'm working from home when I can. So,
and let me tell you guys, people that don't know, like I've known Andy for a long time. Andy lives in Houston, Texas. So, I mean, most of my customers, like, I'll send to Andy and Andy's there, but it makes no difference because this is the way our business operates. So really, it's really nothing for us to be like this.
Yeah, we're geared for it. We're designed for it. And, thank God for that. We're able to still work, and try to, gain income. And make it through this. There's not a lot of people that are as fortunate as that, but I'm very happy that we can do this.
We're very fortunate in this, as hard
Absolutely.
as it is.
Yeah, absolutely. So my company has decided to partner up with a credit company that works on helping people fix their credit. And when I say fix your credit, what I mean by that is the inaccuracies I was talking about before. 80% roughly of all the credit reports in the nation have some sort of inaccuracy on them, whether it's incorrect reporting, an incorrect name, incorrect social, whatever it might be. There's something inaccurate on pretty much everybody's report that's out there. So we've actually partnered up with a company. Their name is 700 Credit Repair, and I'm going to be doing a live later with their owner later today. And what we've decided to do is to try to combat this. So when we're seeing anybody that has a score that's below, and I'm going to start going with 680. If I see scores below 680, we're going to offer something to them to help them get that score up. Because the other thing that is happening, and I've seen this happen on a couple of my own loans. I got a loan in process right now that has a credit score that is now not acceptable. It's already registered with the investor. It's already locked with the investor. And they're telling us, hey, we're not accepting this loan.
Wow.
So what we're doing with this particular customer is trying to do this process for them too, to get their score up so we can go ahead and get the loan done. So, we're going to be giving out an opportunity to anybody that we see, and anybody that, even if you're not a customer of mine, if you want to look into this, we're happy to talk to you about it, because it's really important. It's not only going to help if you're looking to purchase a home, but obviously your credit score drives interest rates on things like credit cards, car loans, etc. So this is a really good opportunity, because the flip side to this right now is that, the creditors that are reporting these things on the credit reports are also working with skeleton crews right now. So it's a good time to try to get some of these disputes in the process, to try to get some of this stuff off, because they're not able to respond as quickly in some cases.
So if somebody really wants to buy a home in the next 2-3 years, let's say, they better contact you and get kind of on board with this, just to kind of, because who knows what the requirements are going to be a year from now, 6 months from now, whatever.
Correct. And it's really going to kind of depend, and this is just my own speculation,
Sure.
I don't think this is going to
Me
be
too.
long term.
I'm wrong most of the time, Andy.
Me too, man. But, I think as far as risk adversity, for investors and lenders, it should be short-lived, because I think on the other side of this virus, we're going to be able to come out, and the economy should be able to pick back up pretty quickly, because it's not driven by anything functional in the economy itself. It's driven by the outside that is beyond anybody's control.
Correct.
So a lot of pent-up, demand for services and products right now. The toilet paper, think about that.
Oh my gosh.
So there's a lot of pent-up demand for all kinds of products and services. So I think we'll be able to come out of this pretty quickly. Once we get there, though, it's going to be, it's just hard to determine how long that will be. I mean, you've seen the governor of Virginia's got them on lockdown, I think, till June 10th. And, here in Houston, we're on a stay-at-home order until April 30th, and they've closed the schools, I think, until May 4th. So it's going to kind of depend on the duration of this and how long that takes and how many foreclosures these lenders end up seeing. But if I had to guess, I would think we're probably looking at these higher credit requirements for probably a good year.
Yeah.
When things settle back down, they should start, coming back into the fold as far as allowing, decreasing the credit score requirements and such. We saw this when the Great Recession happened too. A lot of the credit score requirements jumped up, and the guidelines changed. And that actually lasted for quite a while, until the real estate market and the rest of the economy kicked back into gear. And then those guidelines started loosening up a little bit, but I think that will happen. That turn time will happen a lot faster this time.
I gotcha.
So that was really, what I wanted to get out there today, is just understanding what's happening, why it's happening. The lenders, the investors are risk adverse right now, because they know they're going to have foreclosures that they have to deal with. So they do not want to take on any additional, what they call high risk loans. And honestly, 680, 660, 640 is not really high risk. But in the marketplace currently now, they're just not going to want to take on any kind of risk at all.
Definitely tapping the brakes. I get it.
Big time.
And buddy, and that's something that we could, if the person feels that they may be headed down that road, if they would contact us, we could put you with Andy to see if you can somehow get that mess figured out, or if you do need a short sale. We do that for you, and we don't charge, the customer doesn't get charged anything on our end to short sell a home, which is, they think, oh, I got to pay a realtor commission, but the banks actually pay us a commission to do that rather than go through the whole foreclosure proceedings.
Sure. Yeah, it saves them money at the end of the day. They're getting some sort of return on the loan, and saving a lot of court costs, et cetera, for processing through the foreclosure. So yeah, I mean, anybody out there that's looking to purchase, thinking about purchasing, or even if you've already been pre-approved, make sure you contact your loan officer, because I mean, yesterday, Jimmy, I think I called 4 or 5 people that I had pre-approved and said, hey, look, I'm sorry, I can't pre-approve you anymore.
Yeah.
The guidelines have changed. So this is what we need to do to get you ready. And so please, any of you guys out there that have been pre-approved or are looking for a house, make sure that you're reaching out to your loan officer and just double checking, making sure that you're still okay with all these changes. And if you have questions, please reach out to Jimmy, to me, and help absolutely any way that we can. It's going to take a village to get through this all together. So just any way that I can help anybody out there, I'm happy to. So
well, you're fantastic at what you do.
Or whatever that might be.
You're fantastic at what you do, and I appreciate you sharing all this info with us. It's a lot to take in, but I mean, this is, and like we just said, no 2 days in this business are the same, and things are changing almost every 48 hours with us.
Absolutely.
So, but things are still moving. I mean, we were busy yesterday, and people are still out doing it. So it's not like people are like completely not doing nothing. We had a real good busy day yesterday, and I mean, people still got to have houses to live in and still trying to do things. And
when I noticed you guys are doing a lot of those virtual tour type of deals, which I think is just awesome. I think I hit you up on one of yours the other day saying, look at Jimmy Mutter just out serving the community just like always. I think that's really important for us. Help where we can, and keep the wheels moving, so to say. I mean, I closed one earlier this week. I've got, I think, 3 or 4 closing next week. So we're still doing business. We're still closing. It's just some of the things, some of the guidelines, some of the requirements are a little different than they used to be. So we just got to prepare for that. That's all.
Absolutely. So if you're thinking about buying in the next year, maybe 2 years, you should probably get with Andy and try to really figure out what your credit score is now and see how it could be improved. So yeah, Andy, I think anybody under 700, which I'm probably in there too, should probably get
me too.
See like where we can improve, because I think we could always do better regardless of where we're at. So, and most people I think do want to buy or do something within 2 years, maybe not a year, but at least 2 years. And at least you get to kind of figure things out. So when this stuff does change and starts to become more normal, buddy, you're ahead of the game.
Absolutely.
Because all this stuff takes time anyway. So,
it does, and obviously credit score is a huge driver on what kind of interest rate you're going to get as well. So it helps you there, the lower your rate, the lower your payment, obviously. So
right now time's on our side. So it is what it is. Well, Andy, thank you so much for coming on, man. I know you got to hop on another Zoom meeting in just a little bit. And this is kind of our new norm. I was telling everybody that my phone dies several times a day now that we're more doing this. And hey, it is what it is. It's the times.
It is. Well, I appreciate you having me on, Jimmy. Let's do this more often. And anything I can do to help you guys, just let me know. I'm happy to do it, man.
All righty, man. Well, stay safe out there in Houston. And we love y'all. And if y'all need anything, let us know.
Likewise, man. Back at you.
All right, man. Have a good day.
You too, buddy. See you, man.